I'm Victor. I'm an active value investor, and I like to share my investing journey with people on YouTube. I've learned a ton on YouTube, and I like to share the investments I'm making, the analysis I'm making on companies, and hopefully that is helping the individual investor community out there. The company I'm going to cover today is Dropbox. It's a company that I've owned for about a year, and so far, so good. I'm up on the stock, and they just had their earnings today. So I was able to update my analysis on Dropbox, and I wanted to share that with you. I like to scorecard my investments, and it involves asking 4 questions and then followed by a decision to either buy more shares, hold my shares, or sell my position in Dropbox. First, is it an industry I want to be a part of? Is the company operated and performing well? Is debt less than 3 times EBITDA? And am I getting a discount on the stock? Based on the answers to those questions, I then decide whether I'm going to buy, hold, or sell Dropbox. Dropbox is a cloud company that allows individuals, businesses, creators to really store all their digital assets and files in a nice little site where they can back up all their data and have easy access to Dropbox. They have over 700 million registered users. So it's a really successful company that has a lot of customers around the world. The company released their financials for all of 2022. And starting with the income statement, things look good. They grew their revenue, which is good to see. And they're a real profitable company. Moving on to their balance sheet, it also looks good. They have very good cash and short-term investments, and their debt is under control. Dropbox generates positive free cash. They have good operating related cash flow, and they don't have a lot of capital that they need to spend. So it nets out to a nice $764 million of free cash flow. And they're rebuying shares of stock. And that's always good to see because it makes the existing stockholders own a greater percentage of the company. I value companies based on their free cash flows they're going to generate in the future. And I discount those free cash flows to today's value. And it starts off with the free cash flow. So Dropbox in the 2022 generated $764 million of free cash flow. Real good job. I'm going to grow those cash flows over the first 4 years at 5%. Nice steady growth. They may do better than that, but that's a good conservative number. And then long-term growth 3%. And I think they could do that just because they could raise their prices a little year after year. The discount rate I'm going to go with is 9%. This is a smaller company, a smaller cap company, but they have an excellent balance sheet. They have a ratio of 0.81. I'm looking for less than 3x, and they're well below 3x. So good job on that, Dropbox. Based on that criteria, I get a valuation of $12,513 million. And their market cap currently is $8.3 billion. So it leaves a nice available discount of 50% discount on the stock. And again, their balance sheet is really good health. So it's good to see that their debt is fairly low compared to EBITDA. Their performance is really good. They're profitable. They're steadily growing. So it's good to see that in a company. I really like their free cash flow. They generated $764 million of free cash flow. That's a yield of 9%. And it's, rare that you see that in a technology cloud company. So it's good to see that. The market cap's only 8.69 billion. So that's a good yield on cash. And they have a very good balance sheet. So, good job Dropbox on having an excellent balance sheet and growing your company. For 2023, I'm looking for much of the same, just single digit growth. They're going to buy back stock, and the stock should rise because they are profitable, they're growing, and they're buying back shares. My long-term outlook is this is a well-operated digital storage company, so they'll continue on. They have a sticky product, meaning customers just don't move off of these platforms unless the platforms are too expensive or they have a big outage or something. And I think that Dropbox really becomes an acquisition target, especially a company that wants to grow. They're cloud related businesses. They're pure subscription based businesses. This is an acquisition target that companies will go after. Now, this scorecard Dropbox. Is it an industry I want to be in? Absolutely. I work in the technology industry. I sell cloud related solutions as well, and really believe that this business is very lucrative and profitable. The company is operating, performing well. Debt is well below 3 times EBITDA. You're getting a discount on the stock. So all that criteria fits. I'm buying more shares of Dropbox. Thank you for watching the video. I appreciate it. I hope you found it interesting and you've discovered something new about Dropbox. Do me a big favor and leave a comment, like the video, and subscribe to my channel if you'd like to see more videos like this. Good luck investing in 2023.